Welcome back, Bearded Banker Podcast, episode 5. We're going to start with sending our love to Israel and Palestine still. We see what's going on with the war over there now and what's being shared on social media. It's really crazy what's going on, and the politics and the back and forth and the blame. But some of the images that we've seen have just been horrendous with the families and the children and the babies. So our love and support to what's going on over there, and whatever cause you support and why, feel free to share it. We want to learn, we want to educate, and we know that there's two sides to every story, and we want to understand and hopefully reach some level of peace. Also, on the last podcast was talking about flipping NJ and DJ Envy. So now that I put myself out there, so to speak, and commented on it, I started to get DMs and messages with even more information. You know, in my podcast, I was trying to play the neutral kind of mediator angle because I don't know the facts, and none of us really know the facts. I mean, some people have more insights than others, and some people believe 100% that what's going on is a scam or a scheme, but we don't really know, or at least I don't really know. And I started to get some DMs with other stories, not even related to real estate, just dealing with Caesar and his wife and their cohorts, if you will, and some things that went down that, you know, weren't on the up and up. So I started to get some messages like that, and, oh, it's a scam. And again, we don't really know, but he was arrested and bailed out. He posted bail and was home, and some of the stuff he was posting was a little antagonistic with being home and, you know, catch me if you can sort of vibes. And I think if I read correctly or saw correctly that the feds went into iHeart Studios and took some computers from DJ Envy to search and see what's going on there. So more to come on that, and we will definitely keep you posted and see where that goes. Again, hopefully if the people that invested did not get their money back and are actually victims, that they do get something back from this, some type of funds, and make them whole, and it all works out. We're going to go through some threads. Before we do that, I was watching a podcast. I believe it was Diary of a CEO, and he had a guest named Sadhguru on there. Got to do some more research on him. Wasn't too familiar with his work, but he had a really good podcast about purpose and meaning of life and being blissful and understanding what we're really all here for. And he gave this example that I thought was pretty interesting because it ties into some current themes in life that have come up, and having to keep going and putting one foot in front of the other. And bad times are going to come, whether in business, society, and just life and death, family, friends, right? Things like that. So he gave this example. I'm going to try to paraphrase it or rephrase it, about a doctor and a mechanic. And he said, I'm going to tell you a joke. A doctor was driving one day, and he was driving a really nice car, fancy car. You know, he's a doctor. He makes really good money. And he's driving an Aston Martin, let's say, maybe a Mercedes, maybe a Ferrari. It's just a really nice sports car. And he has trouble with it, so he takes it to the mechanic. And he says, hey, I have to leave my car with you. It's giving me some trouble with the engine, but you know, I have to get to work, so I'm going to take an Uber or a cab or whatever and go to the hospital so I can do my work. And he's a surgeon. And the mechanic says, yeah, no problem. We'll take a look at the car and come back this evening, and we'll have it ready for you. So the doctor goes to work, goes to the hospital, performs his surgeries for the day, comes back later that evening to pick up his vehicle, and the mechanic says, oh, I'm sorry, it's not ready yet. Come back tomorrow morning, we'll have it ready. The doctor says, okay, no problem. Leaves, comes back in the morning. Mechanic says, oh, you know, it's still not ready. Sorry, come back this evening. And the doctor says, you told me the same thing last evening. Why is it not ready yet? Mechanic says, no worries, you know, come back this evening, we'll have it ready. Doctor goes to work, performs his surgeries, comes back in the evening, and the mechanic says, you know, it's crazy that you perform your work on engines as a heart doctor. so the engine of the human body, and you get paid $50,000, and I perform the same work on an engine as a mechanic and get paid $500. What's the difference? And the doctor said, well, the difference is that I perform on my engine while it's still running. And I thought that was a great story because it's true. A heart surgeon is working on you and working on your heart while keeping you alive at the same time, where a mechanic might run the engine, see what's going on, turn the car off, and then do what he has to do to fix it. But try doing that while the engine's still running, it'd probably be pretty difficult. And it's a metaphor and an analogy for life, because no matter what's going on, time is going to continue. The sun is going to go down, the sun is going to come up. The mailman's going to come drop off the mail, right? Things are just going to keep moving forward. Work is going to call, clients are going to call, clients are going to complain. Things are going to keep moving forward. And I think sometimes when things get tough, either in a market, with your finances, with a relationship, the loss of a loved one, you just want things to stop and you kind of want to start over. Can't really do it. You really have to figure it out while moving ahead. You don't get a blank slate to just say, like a video game where if it doesn't work out, you just reset the game, unplug the game, die in the game, and just start over. It's not like that in real life. So you have to figure out how to continue, how to tweak, how to adjust while still moving forward and still getting things done, right? You still have bills to pay. You still have a job to do. You might be parents and still have children to take care of. You might be children and have parents to take care of. Whatever the case is, you have to keep going. So I thought that story and that analogy was pretty interesting, something I'm going to keep with me for a long time. So let's go to our threads. So some updates on the economy, starting with jobless claims again. This week, jobless claims came in at 198,000. Expected consensus was 211,000. So well under what was expected, showing again some strength in the job market. And the prior weeks were around 204, 207, 209. So it dropped off a little bit. So maybe things might be getting a little bit better. I did see something on CNBC about some bigger banks laying off a number of workers. So we'll see if that has any impact on these numbers in the coming weeks. Also, the 30-year fixed rate mortgage rate has hit 8% for the first time since the year 2000 as Treasury yields soar. So it's no secret rates are going up. We just hit 8% officially for the average 30-year fixed. And if you were looking for a mortgage in the last month or so, maybe even a little bit before that, and if you didn't have an excellent scenario, excellent credit, excellent income, you might have still been in the 8s, 8.25, 8.5. Now it's definitely in that range. There are still programs to get lower rates, so ask your loan officer about that or ask us about that. We can definitely look into some options for you. 10-year Treasury yield broke above 4.9% for the first time since 2007. So I'm posting all these things and we're talking about all these things just to give an idea of what's going on and when the last time these things happened, to kind of see, history repeating itself and what the signs were then or what came after these things, so we can prepare and understand what's coming for us. It is much different than early 2000, 2007, pre-2008, because the real estate and mortgage market is so much different and has been tightened up so much that it's not going to be the same flurry of foreclosures and things like that we saw. And there's not borrowers out there with 5 properties they can't necessarily afford. But we will see some adjustment. Now, one thing to note on this is AirBNB. So during the pandemic, with the stimulus money and just the flood of income, low rates, a lot of people wanted to invest and they bought Airbnb properties. And they bought them in places that may not necessarily have the attractions as the big cities or the tourist areas. But they bought these nice properties. People were traveling. People wanted to get away from people. And they made these investments, and Airbnb was doing really well. And ever since the end of the pandemic, if there was an end, right? Because they're still saying we're in it. But the end of lockdown, let's say, people went back to work. They stopped traveling to these places as much, and now the Airbnb market isn't what it used to be. And on top of that, these people now have another mortgage, maybe on top of their current mortgage, right? Their primary home. They bought this investment property that they have to cover. They have to service that debt. And with less activity in Airbnb, with the crackdowns that have come on Airbnb in certain states, I know New York, I believe Georgia or Atlanta, certain cities where they're cracking down on Airbnb, it's going to be tough for these people. So we may see an influx of properties hit the market from unsuccessful pandemic Airbnb investors because they just can't make the payments and manage the properties without the tourism and the guests that they need. So that could be something to keep an eye on. But other than that, we're not going to see too much as far as foreclosure and short sale, because also banks are going to do everything they can to avoid 2008. So they're going to work with borrowers a lot more on short sales and loan modifications and things of that sort to avoid foreclosing on so many properties if they can. They're going to want to help borrowers and continue to make that interest money so that there's not a huge cost to the economy. But also the influx of inventory will definitely help because there is still demand out there for these properties, and it's probably not going anywhere. There are people that still want to buy homes so long as they can maintain their income and their jobs, and that part of the economy stays strong. Solving most business problems boils down to three things: raising prices, cutting costs, or increasing sales. The answer lies in some combination of factors reduced down to these three pillars. So I posted this because we're doing a lot of work, me and Laura, on the cleaning business that she has, that we have. I mean, it's her business. I help out as a CFO, I guess you could say, and just a consultant where I check in every now and then and see how things are doing. And, the business does really well. We have great customers, repeat customers, members that are getting consistent cleanings. If you're in the North Jersey area and you need a residential cleaning, or you own a small business like a barbershop, a salon, an office, anything that needs to be cleaned consistently, we can definitely service you. So feel free to reach out. But I was doing some numbers and trying to see what's going on with that business. And we're doing well. We're not profiting anything significant because all the money is staying in the business, but it's pretty much paying for itself. And we want to figure out now, we just hit 3 years in the business, and now it's, first of all, getting over, past 1 year is already an accomplishment, especially as a side hustle. Now 3 years in, trying to dedicate more time to it. One, because we have more time because, my business is slow. Might as well keep an eye on it or do a little bit deeper dive and see what's going on. And two, to make sure that we make it as successful as possible, you have to inspect it. You have to measure everything so you can see what changes you have to make. And in looking at the business, or any business, it really comes down to three things. We can either raise prices, we can cut costs, or we can increase sales. Or you can do a combination of all three. So if you're having trouble with your business, even in mine with the mortgage business, we could raise prices, which I don't really have too much control over because I work for a bank and rates are what they are and the market is the market, and there's only so much we control on that end. Plus it's highly regulated anyway, so not much we can do there. Cutting costs, yeah, we can do that. We can cut costs on lead generation, cut costs on processing fees, cut costs on tools that we have, or cutting costs on some things that we don't need, trying to get lean and only keep what we actually need to do business. And then increasing sales, right? Everything is downstream from lead generation, so increasing sales is always going to help a ton. So if you do a combination of all three, you can really start to put your business on the right path. Even if you watch some of these shows, me and Laura like watching Kitchen Nightmares with Gordon Ramsay, or even the Bar Rescue, those kind of shows, it boils down to these three things. They're talking about, food costs and costs of each ticket. They're talking about getting more people in the door, and maybe they do a renovation to help that out. And and obviously prices and the menu and things like that. So same idea. It boils down to these three things. If you're going to have layoffs, you're cutting costs. If you're going to add a telemarketer, you're increasing sales. Just things you can do to improve the business boils down to these three things. So take that with a grain of salt if you want, because it's just my opinion. But that's worked for us in the businesses that we've run, and we think it will continue to work because we've seen the improvements already. Everybody leaving a tough market is like that diamond miner meme. The market trend is never a good enough excuse to jump in or out of anything. If what you're doing isn't working, change it and get better. It's supposed to be difficult to be above average. Respect the work. And then I posted that meme with the two miners, diamond miners, and one's like so close to the diamonds and he turns around right at the diamond pit, and the other one's still going kind of aggressively. This is in connection with the prior post. Just being in the real estate and mortgage market, it's definitely tough, and people are leaving a tough market. Or let's say even if you're an investor or you were looking to buy and you're jumping out of the market trend is never a good enough excuse to jump in or out of anything, right? So if the market's bad, it's not a good enough excuse to leave just because the market's bad. People make a lot of money in bad markets. People make a lot of money in this market, even doing loans or being a real estate agent. So if it's possible, why isn't it working for you? And that just means that you have to get better, right? If what you're doing isn't working, change it and get better. It's supposed to be difficult to be above average. This is, it's been easy for so many people to believe, and even myself, this is a lot of this podcasting and posting is just me giving advice to myself and sharing it with you guys because it resonates, or it may resonate. In high tides, all boats will rise. When the water goes out, you'll see who is skinny dipping. What that means is when things are good, and everybody's making money and everyone thinks they're an all-star. But are you really that good, or is the tide just rising for everyone and all boats are rising, right? And if you think that you're that good and you're not, when the tide goes back out, we'll see who's skinny dipping. I think I heard that quote from Warren Buffett first. I'm not sure whose it is, but I like it. Because when things get tough and people are getting out, you can see that maybe their process wasn't what it should have been, or maybe the perceived success or revenue or profit or money that they were making isn't what you thought it was, or was a scam in some cases. The tough markets make things a lot more clear. And I remember end of 2021-ish, just knowing that those 2 years, 2020 and 2021, making the most money in our industry and in my career, knowing that I didn't change fundamentally. I might have gotten a little better with the years of just doing my job with being a consultant for clients, opening, processing, and closing a loan, selling, closing, right? Converting. My process with, tweaking things and making sure the communication is there and it's smooth. That definitely improved, but I knew on some level that I didn't change that much, and it was the market. And knowing that, okay, if it's this good now, it's when it gets bad, it's probably going to be, the same level of change just on the other side. So it's going to get pretty bad. And that's where we're at. And I feel like a lot of people weren't prepared for it, or the people that jumped into the game when things were good, now we're like, stirring and not really able to make ends meet. And my biggest advice is just don't quit. If you have to do what you have to do because your bread and butter or your passion project or your dream isn't working, and you have to go wait tables, be a bartender, get another job, fall back on your degree, do a number of things just to make ends meet and pay the bills. Again, going back to that first quote with the mechanic and the doctor, you don't get to just put things on hold and stop everything and start over, right? I have a tattoo on my chest that I got when I was really young. I was 21 years old, and it says no resets, no regrets. It's all spelled correctly. And I actually got it before that movie came out. What movie was that? I think it was Where the Millers, when he says to the kid, "Oh, no regrets, not even one letter," because it was spelled wrong. I think it was Jason Sudeikis, right? And it said no regrets. So after I got the tattoo, everyone would that joke would come up a lot. But anyway, I got that tattoo. I still believe in it. I still live by it. And I think at the time, what I was realizing was that you don't start over, right? There's no resets. You can't just take the game out, blow on it like an N64, plug it back in and start over. And you can't live with regrets. Now, are there some things that people regret? Yes. But if you look at everything is about perception and your mindset and how you frame something. So if you look at it as a lesson and you learn from it, there's nothing to regret. It's okay, I made a mistake. I learned from it. I'm going to apply what I've learned and I'm going to get better. And that was the idea. And that's still the idea. And being in the position that we're all in now, or most of us are in now, it's like, don't regret it. Don't try to stop everything and start over blank slate. Like, let's say you have a lot of debt and you're like, oh, I wish someone would just come and pay off all this debt and I could start over knowing what I know now. No one's coming to save you. There is no Superman. Winning the lottery is probably not going to happen. Chances are very slim that happens. So you have to go through the pain of fixing it yourself. You created a mess, potentially, or a mess happened and you're in it and you got to figure it out. And I think I thrive, or I'm open to the challenge. Now, don't get me wrong. It's hard. It makes you question a lot of things. Why am I in this business? Why did I go down this path? How did I end up here? Is this what I want to do? What do I really want to do? Do I have a purpose? Is there a purpose? Is purpose even a thing? Meaning of life, right? You go down all these paths. But if you decide that you're going to learn from it, you're going to get better and you're going to grow, it'll happen. And it's really a decision. And being above average is supposed to be difficult. By definition, it's above average. It's not supposed to be easy. And for the last couple of years, I saw something else. I was listening to CNBC. I think it was CNBC. Or it might have been something on social media. And someone said, for the last 13 to 15 years since the Great Recession, things have been on the up and up, right? Everything's been going up. The government artificially kept rates low. Money was cheap. And if you started a business 10, 15 years ago and everything's just been going up the whole time, you think you're a superstar. And then a tough market comes and you've never built the foundation necessary to withstand it. And, when the tide goes out, you see who's skinny dipping, meaning like, who's losing their shorts, so to speak. And, I've been in this business 10 years, in the mortgage business, and I wish I would have started doing what I'm doing now back then, because I would have been, many levels ahead, many laps ahead. But this is where it's at. So over the last couple of years in the pandemic, implementing some things and putting things into the business to make sure that it runs a certain way. And, with my social media, with clips, with the podcast now, with YouTube, getting my name out there, the branding, right? That was all happening before anyway. Now it's just so much more important, and it's given me something to say, okay, if the market isn't the same, the business isn't there as easily as it was, where you can't just befriend a realtor and get an inflow of deals, right? There's a different way of going about it. You really have to be a brand yourself. I was talking to another friend of mine. Shout out to Kai. I know you're starting your podcast, and we're going to definitely jump on that and do that together. So I'm excited about that. But just talking about, he set up his own podcast, and it's like you got to wear 1,000 hats, right? You got to be a producer, a director, a host, a guest, a content creator, an influencer, a personality, a realtor. And then as a realtor, you have to be, you're a therapist, you're an inspector, you're an appraiser, right? You just wear a lot of hats, especially when you're self-employed or building your own business. Same thing for a loan officer. You're all those things these days. It's not as easy as it was to just work for a bank and let the deals come in, right? It's different now. And that's what it takes. And that's what it takes to be above average. And are you willing to do all of that? That's really the game. And then the last part of that is respect the work. Like, you can't disrespect the work. You can't say, oh, this is too hard now, and think that it's just going to happen for you. You got to respect the work. You got to put it in, and you have to, you have to know that it's going to be difficult to be above average, because by definition, it's not average. Retail sales were up this week. Strong consumer, ? So that was posted before the jobless claims came out, and I just realized that it's probably connected, right? So retail sales, which is basically consumers buying retail goods, were up this week. Does that mean there's a strong consumer? On the same token, jobless claims were down, so unemployment was down. So that's connected, right? There's some correlation there. If unemployment claims are down, people are working and making money and maybe feel a little bit better about the economy. And, retail sales being up, maybe we do have a strong consumer, and maybe that's a sign of a better market than we're thought to have. There's still conflicting, we'll say, beliefs on if we're going to have a recession or not, or a soft landing. And if you're in real estate, we're in a recession, clearly. But, whether they actually want to say it or not, and when we actually hit the 2 quarters of negative GDP required to actually call it a recession, which we did, that happened already, but we just didn't call it a recession. We'll see what happens, or if we're going to have this soft landing, so to speak. And that's it. A week ago, we went over jobless claims again. So just some updates there. We're going to talk about mortgage tips or terms, and I don't really have a term for this week, but I did go out to dinner. A friend of mine took me out to dinner because he wanted to pick my brain with his business partner about investing. They want to get into real estate, and I appreciate that. Thank you guys. Had some dinner, had some drinks, had some laughs, good times, and I was able to impart some knowledge on them, some wisdom on them from being a loan officer, being a flipper, being an investor, having the experience I have. And their question was really around flipping or holding. What should we do? Now, what a lot of people do is they flip a property, they take the proceeds, they buy a rental property, right? So let's say they buy a single family home as a flip. They know they want to flip it, sell it, make the money. Then they go buy a 2-family, 3-family, 4-family, keep that as a rental, rent it out, do it again, flip another property, get some capital, buy a hold. And they kind of do this to build, to get the cash, get the big chunks of capital, and put it into a property and hold it for cash flow and rental income. Now, getting into a flip, there's levels to flips. It could be a lipstick job, something just cosmetic. You could do whole additions. You could gut a whole house. You could do one wall where you knock it all down except for one wall and, put up a brand new house. So it's still a renovation, quote unquote. It's not technically new construction. So there's a bunch of ways to do it. And it really depends on who you are as a person, where your passions lie, what you think you're good at, and where you want to be. Like, for example, I'm not the guy that wants to put the nails in or get dirty or put down tile, right? My partner, Joe, when we were flipping houses, did all that stuff and loved it. So we had, if you have a partnership like that, then it could work. One's making sure the bills are paid and checking the finances and, dispersing the funds, and one's boots on the ground, making sure contractors are doing their job. And if they're not, or they can't make it or whatever, getting down and dirty. So it worked, for us. You have to decide with either if you're doing it yourself or with a partner, do you have those roles? So that's one, flipping and holding. The other thing is, do you want big chunks of money and capital gains tax potentially? Or do you want passive income, quote unquote, passive income, and cash flow. Now, in this market, with rates where they are and prices where they are, especially in the Northeast, in North Jersey, it's hard to find a property that really cash flows right away. You might even have to put money out of pocket every month with your tenants in the beginning. But the goal is that once that property is paid off or you refinance and rates come down, it's going to cash flow nicely. So it's definitely that's why they call it an investment, right? It's not a job. It's not a way to make money now most times. It's very rare to find a property, and it's doable, but to find a property, at least in these markets with high rates and high prices, that cash flows significantly. You might make $100 or $200 on a house, but that's not going to change life for you. It's not life changing for you. Over time, it can be. If you have 10 of those, it can help, but it's very hard to find a property unless you're doing something maybe under the table. You're renting a basement or an attic that's not supposed to be rented, that you can make $500, $1,000 or more on a house that you have a mortgage on. So that's just where the game is. So just explaining these things to them, obviously giving some information about loan programs. There's construction loans, there's fix and flip loans where you could buy property strictly to flip it, and you get a 1-year interest only loan for the purchase and the renovation. If that's something you're interested in, you can let me know. I've used those before for our endeavors. Those are great loans. And if you want to buy something as an investment, 1 to 4 units, you can use a conventional mortgage as an investor, or if it's 5 units or more, you can use a commercial loan to have relationships for those as well. So there's different ways to go about it. There's the BRRRR method: buy, renovate, refinance, repeat. So, some people, they'll flip a property, then they'll buy a hold property like a 2-family that needs some renovations. They'll renovate it, they'll rent it. Now the value has gone up, and they'll refinance, cash out, and then buy another one. And you could do another one as a flip and get more cash, or do another one as a hold, depending on if you want to be in the flipping game or not. And this also goes back to the flipping NJ and DJ Envy thing, because again, on the last pod, I said maybe this started innocently and just turned into something that it wasn't supposed to be, and was never really a scam. And then maybe it turned into that, or maybe, these are all allegations, right? Allegedly. But what could have happened was that Caesar was doing what he was doing, and it was working. He had his relationships with the banks because he's had successful deals with them. And maybe he was getting some 1-year interest-only loans, which are adjustable in nature usually. Variable rates, right? They go up and down with the market. Or maybe he had some ARM rates, 3-year, 1-year, 3-year, 5-year ARMs on some properties. And with rates going up the way they did, and the market, slamming the brakes the way it has, maybe something just got caught up, and he didn't have the money he needed to pay, to service the debt, had to take more money from more investors. Then people, when these things happen and people need their money because they lost a job, or, they can't pay their bills, they need their money back from these investments. And if he doesn't have it, he has to borrow it from someone else to give this person their money back. Same idea with a bank run, right? Remember a couple months ago, there were banks that were failing. What happened was the market panicked. So that Silicon Valley Bank, the market panics, right? Things are getting bad. Everyone wants to take out their money. And the banks are only required to have a certain percentage of their deposits in cash on hand at any given time. So if everyone comes to take their money from the bank, there's not going to be enough there. Same thing happens with these Ponzi schemes. That's usually how they fall apart. Something happens in the market and everyone wants to take their money, and you don't have it for them because it's either invested in non-liquid assets like real estate, and you can't just refinance it because now rates are higher, or you don't qualify because of what's going on in the market, or whatever the case is, and you can't get everyone their money, and then you run into issues. And again, this is allegedly, right? Alleged Ponzi scheme, not necessarily a fact. We don't know that for sure. Caesar is out at this time and posting and showing that he's home, so we don't know what's going to happen. But that could have had something to do with it too. And again, giving him benefit of the doubt still, which I don't really agree with some of the things he's been posting, and kind of, again, instigating or antagonizing people, but to each his own. It could have been something like that with the market. So going back to flipping and or holding, when you get in the flipping game, all of that matters. Like, you have to make your money on a flip on the front end. You can't say, okay, well, prices now for these homes are $400,000, and I plan on this renovation being 6 months, and in 6 months they're going to be $425,000, so I'm going to make $25,000. Or yeah, I know it's going to take 6 months to flip this house, but if I could do it in 3 months, then I could sell it in the summer still when prices are higher instead of going into the fall and make my money. That's not the right way to go into it. You make your money on the buy, assuming the worst case scenario in the market, or maybe if even things might even get worse in the market, right? Because a lot of people lost their shirts per se when they bought properties in 2019 and then the pandemic hit, right? And they might have made it through and got saved with forbearance and prices increasing, rates dropped, demand increased, and they did okay. But then imagine that same person that flipped in 2020, 2021, they did another one, 2022, they buy another one, and now rates are starting to go up and real estate, hits the brakes, and it's just hard to qualify. Your payments are going up, whatever the case is. That could definitely impact some people in the game, especially if they're rookies or novices and not understanding that you make your money on the purchase. So if a house is worth, $150 as is, and you can get it for $130, you're pretty much guaranteeing your $20,000 profit as long as you can hit your goals with the flip itself. Which also, as soon as you start opening up walls and dealing with contractors and all that stuff, permits, the town, that could even end up costing you. So it's a tricky game. That's why I don't really agree with all these things on social media saying you could do this with no money and nothing out of pocket and no reserves. Like, you have to have money saved. You have to have a rainy day fund. You have to have just in case funds set aside. Missed opportunities from last week. So one was the self-sufficiency test that I didn't mention. So one of the differences between FHA and conventional. FHA on 3 and 4 family units. When you're buying a property to live in, you're going to live in one and rent the other 3. Let's say it's a 4 unit. FHA has a rule called self-sufficiency test, which means that the rents from that property have to cover your mortgage payment. If the rents from the property don't cover the mortgage payment, then the property itself doesn't qualify for FHA, even if you qualify for the FHA loan. So aside from you getting approved for FHA to qualify for the purchase, the property itself needs to qualify with self-sufficiency. Conventional doesn't have that rule. So that's just another reason why conventional is a little bit better. So conventional 1 to 4 units, 5% down now. You will need some reserves, so extra money on top. But there's no self-sufficiency test and there's no upfront mortgage insurance premium that FHA has. So it's a little bit cheaper out of pocket long term. And the PMI, the private mortgage insurance or the monthly mortgage insurance that any loan has with less than 20% down, FHA or conventional. When you do a conventional loan and you hit 20% equity after paying your loan for a few years, that PMI falls off automatically. FHA, it doesn't. You'd have to refinance out of FHA into a conventional loan, which is another loan, another transaction, another set of closing costs, and qualifying again. Should you qualify? If you don't qualify, you could have an issue there as well. Another missed opportunity. I just went over this. Flipping NJ and Caesar might have just got caught in a bad market. Rates go up, sales and buyers slow down, no money moving to take from Peter to pay Paul. If it was a Ponzi scheme, allegedly. So we'll see what happens there. We'll stay in the loop. Obviously, it's a local thing. It's real estate. It's going on. It's mortgage. It's money. It's a little bit of mindset too. Again, our love to Israel and Palestine. And we have some guests in the works. So a couple real estate professionals, people that I know that are killing the game, a couple other people that want to jump on and definitely have a story to tell and some insights and wisdom that we can relate to money, mortgage, and mindset that we're going through these steps of getting them ready to come on as guests. So super excited about that, and we should see them soon. So we're going to wrap it up there. Again, in the words of 2 Chainz, the goal in life is to be mortgage free. Control your emotions, have integrity. If you want to use my likeness, I need equity. And if you're really trying to win, you need to bet with me. Till next week, we will talk soon.